Welcome back to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Friday the 3rd of January. Let's look at cable, where we've just had out the construction PMI, little bit negative, well, I say a little bit negative, very negative, still very much in contraction territory, but also missing expectations as well. That hasn't helped sterling at all, and it continues to fall back, and you can see that this rolling over again has happened. We saw that back in mid-December, and you then saw the rally over Christmas as the dollar weakened, but then subsequently the dollar has strengthened again in the last couple of sessions, and that has really dragged on cable lower. And sterling dollar seems to be one of the more volatile plays that you see through the forex space at the moment. Certainly 60 odd pips down on the day, about 0.5% on cable, far more movement than you're seeing on euro dollar anyway, and certainly seems as though that sterling is a bit of a volatile play at the moment, certainly on cable. And the retracement that we're seeing through cable is now pulling the market back, and you can see that it's back below 31.50, which was a little mini breakout level, and that's become a basis of resistance, 31.50 to 31.60 this morning. Breaking back under 31 big figure, that pretty much now does open 30.10. Now 30.65 is the initial support from the 30th of December low, but 130.10 is not only the 38.2% fib level, but also the old breakout level from that October high, which subsequently became a basis of resistance. So is sort of supportive in that sense as well then on the retreat. And I said in the morning report that it's certainly possible that, given the reaction that we've had on sterling dollar in the last couple of days, that it doesn't seem as though, certainly for now anyway, it doesn't seem as though that you're going to see too much decisive trending traction through sterling dollar, and it could turn into a choppy range play actually in the coming weeks, given the fact that we've now left that resistance at 32.85 from last week's high, earlier this week's high. And certainly looks as though the market is in retreat now, back towards that 30 big figure area. And 29 figure was that key reaction support in late December. But 30 figure, I think, is a fairly decent sort of ballpark area for this one to just retreat back into and then to take stock. But you look at the hourly chart, you can see that the negative configuration on momentum failing on the hourly RSI around that 40-45 mark. MACD lines bear crossing underneath neutral. Doesn't look great, and certainly the retreat is on for now. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.